GM CEO expects significantly higher EV production in 2024. Mary Barra said the company was a bit disappointed because of the manufacturing restraints in building EV battery cells. General Motors is confident that its electric vehicle production will be significantly higher next year, CEO Mary Barra said yesterday. The news comes after several less than stellar but growing financial quarters where GM slowly increased production but remained well under 30,000 units per quarter since the beginning of the year. "Frankly, we didn't execute well this year as it relates to demonstrating our EV capability," Barra said, quoted by Automotive News. "I am very confident with the EV portfolio that we have and the work that we've done to deliver significantly more Ultium-based products that customers, I think, will really appreciate." GM's head honcho reiterated that it's working to overcome a manufacturing constraint that has hampered the assembly of battery modules for its Ultium-based EVs like the Chevrolet Equinox EV, Chevrolet Silverado EV, and GMC Sierra EV. In a surprise move, the company announced that it will boost its dividend by 33% next year and repurchase $10 billion worth of shares, making it its biggest ever buyback plan, according to Bloomberg. These, along with two other points on the company's investor-focused agenda reinstating the 2023 earnings guide and cutting spending on the Cruise robotaxi venture resulted in a roughly 10% bump in the share price. At the same time, however, the increased financial burden following the signing of a new labor contract with representatives of the United Auto Workers Union which will cost GM $9.3 billion through 2028 made some analysts uneasy about the automaker's ability to pull through. Barra responded by saying that GM will offset the increased labor costs completely by sticking to its four-pillar strategy. "Our strategy is clear," Mary Barra said during an interview with Bloomberg. "It's really based on four pillars of executing our strong internal combustion engine program vehicles. We're performing very well on the market and we see that we're below the average incentives. I think that speaks to the strength of our internal combustion engine products," Barra added. "From an EV perspective, we have confidence in the portfolio we have. We're a bit disappointed this year that we were constrained by the automation to build battery modules. So this is not something that is fundamentally an issue with Ultium. It was more a manufacturing automation issue that we're working on and we'll be out of it by the middle of next year, and making improvements every quarter," General Motors had said. Software and autonomy are also part of the company's strategy to turn things around. The introduction of more affordable EVs such as the Equinox and next-gen Ultium-based Bolt is also expected to drive adoption. GM never saw EV adoption as a straight line, Barra explained, adding that while the growth rate has decreased, it's still growing. GM believes it will start making money on electric vehicles in 2025 as higher-margin models arrive. General Motors is losing money on every electric vehicle it sells, but the company says it's on track to generate mid-single-digit pre-tax profit margins in 2025 as it produces more higher-margin EVs, works out kinks in battery manufacturing and sees battery cost reductions. Detroit, AP, General Motors is losing money on every electric vehicle it sells, but the company says it's on track to generate mid-single-digit pre-tax profit margins in 2025 as it produces more higher-margin EVs, works out kinks in battery manufacturing, and sees battery cost reductions. That's what Chief Financial Officer Paul Jacobson told analysts at a Barclays conference in New York on Thursday, conceding that the company has struggled to ramp up electric vehicle manufacturing. "While the ramp has been a little bit bumpy, we have worked through that," he said. Specifically, the company has had trouble with machinery that stacks battery cells into modules at its Ultium Cells battery plant near Warren, Ohio, a joint venture with LG Energy Solution of Korea. The guidance on Thursday of mid-single-digit profit margins in 2 years is a little better than the low to mid-single digits the company has estimated in the past, Jacobson said. But the new figure includes benefits from U.S. government clean energy tax credits. Jacobson said current margins on electric vehicles are substantially negative as the company builds battery plants, retools factories and then underutilizes them as EV production and demand grow. While the rate of electric vehicle sales growth has slowed in the U.S. this year, Jacobson said demand continues to rise. The company still plans to build factory capacity to manufacture 1 million EVs per year by the end of 2025, but it won't make all of them if the demand isn't there. "I don't want to stuff vehicles into a market that doesn't want them," he said, adding that GM also doesn't want to sell EVs at big discounts. The growth of U.S. electric vehicle sales has slowed sharply since last year. In June 2022, EV sales were growing about 90% year-over-year. By June of this year, the 12-month growth rate had slowed to about 50%, and it remained there at the end of October. Automakers have become increasingly fearful that the pace may weaken further due to consumer concerns about high prices, a lack of charging stations, and whether they will run out of juice. GM is rolling out a series of electric SUVs, including an Chevrolet Equinox with a starting price of close to $30,000, as well as a Chevy Silverado EV pickup truck, GMC Hummer EVs, and some Cadillac SUVs. It also plans to come out with a new version of the Chevrolet Bolt in 2025. The company expects to make the EVs profitable by spreading costs over more vehicles as sales increase, by selling more higher-cost, higher-profit EVs, and with battery cost savings, Jacobson said. Shares of GM, which on Wednesday announced a $10 billion stock buyback program and a 33% dividend increase, rose about 1% to $31.82 Thursday.